Hi everyone, this is Victor from the Fifth Person. At Fifth Person, we invest in great businesses, be it for dividend or capital gain. My job is to help retail investors to do the same so that they can grow their wealth safely and consistently over time. So over the years, we have been getting a lot of questions from our readers about investing, and we're going to be doing a series of videos to address all these questions, and hopefully it can be helpful to you and of course bring more clarity to you as an investor. Okay, so my first question I feel is, I would like to understand your views on dividend cuts. What's your recommend approach or analysis if the stock you're holding has a dividend cut? Okay, so when a company cut their dividend, right, usually the share price also will decrease because those people who buy this company are usually for passive income and for their dividend. So what I will do is that I need to assess this company that the dividend cut, right, is it a temporary issue or is it a permanent issue? So if the company that cuts the dividend is a permanent issue that is happening very competitive in their industry, right, then my take is to not hold on to the company. But if you know that it's just a temporary hurt to their earnings, right, and eventually they will increase back their dividend back to their original amount or even higher, right, then we want to continue hold on to this company. So this is how I usually analyze companies when they have dividend cut. So let's move on to the second question. I've noticed banks have negative operating cash flow in certain years. Is there a concern for it, and should we be concerned? So before I move on to talk about this, we need to understand the structure of the banks. The bank's job, right, is to lend out money. Okay, so if you were to look at their operating cash flow, right, under their working capital, right, they have this thing called the deposit and balance from the banks, and also deposit and balance from the customer. So all these are the money that deposit that people put inside their bank, and their job is to lend out money. So they have another column where it's loan to customer. So that's their business. So they'll lend out. So usually this money is outflow inside the working capital, and that will cause negative in their operating cash flow. And on top of that, sometimes they will take the deposit or the balance, right, and invest in government security or invest in investment security, and that also will affects their operating cash flow, but it will bring back future earnings to them. So it's not a concern or worry when the banks have negative cash flow. Okay, so let's move on to the last question. What are the impact of interest rate on stocks? Example, cost of borrowing become higher, where the company that pays good dividends may find it a stretch to pay similar dividends in the near future. So all this depends on the loans. If the company have very low gearing ratio, right, then when the interest rate increase, right, they may not be affected. But whereas if the company has high gearing ratio, right, that's where the company you need to assess because their dividend may be affected. So when you look at companies with high gearing ratio, you need to assess two things: whether the loan is fixed interest or floating. So if the company's loan is fixed interest rate, right, then it's not much of affect their dividend because usually fixed interest is higher than the floating. Whereas if the company's majority of the loan, right, is floating interest rate, then when the interest rate rise, right, the floating interest rate will also rise, and that will eat up into their dividend, and they may lower their dividends because of the increase in interest rate. So this is how you assess the interest rates on companies that have high gearing. So that's it. I hope you enjoyed today's Q&A video. If you find this video to be useful, or if you know of someone else who can benefit from this video, please feel free to share with them. And likewise, if you have any other questions that you want to ask, just type in the comment box below so that we can pick the best one and answer them in the next few videos. So once again, this is Victor Chung, and I will see you soon.